Get all the details at philsgang.com. That's philsgang.com.
What if you could have an in-depth understanding of the stock market just like the pros? Well, thanks to Phil Grande and philsgang.com, you can. philsgang.com offers comprehensive, up-to-date market information designed to help you understand and anticipate market behavior. With philsgang.com, you'll build your investing confidence even through down cycles and periods of uncertainty. Go to philsgang.com. philsgang.com today. 877-600-GANG. 877-600-4264.
Want good investing advice from someone you can trust? Listen to Phil Grande.
With what's going on today in the economy, especially the stock market, it gets really complicated, but doesn't have to be. My job is to make it simple, to get through the fog. And I think I do that, and I think I do a pretty good job of that, especially why you should be buying a stock, or why you should be in the market, or not in the market, or shorting.
Invest wisely with the knowledge of Phil Grande at philsgang.com. Want good investing advice from someone you can trust? Listen to Phil Grande.
With what's going on today in the economy, especially the stock market, it gets really complicated, but doesn't have to be. My job is to make it simple, to get through the fog. And I think I do that, and I think I do a pretty good job of that, especially why you should be buying a stock, or why you should be in the market, or not in the market, or shorting.
Invest wisely with the knowledge of Phil Grande at philsgang.com.
Hi, I'm Phil Grande of philsgang.com. Over the years, I've successfully taught tens of thousands of investors how to navigate the market with confidence. Become a Phil's Gang member and receive the training, the advice, and the software that will take your investing to the next level. I have a team comprised of successful investors, all with proven track records, and the Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy, when to sell, when to hold, when to run like hell, even short. Learn about common market mistakes and how to minimize them. You don't have to be a seasoned investor to benefit from Phil's Gang and platform. No matter what level investor you are, my strategies for investing are designed to put you on the path to success. Sign up for the 10-day free trial to see our platform in action. Avoid market pitfalls and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com.
I've been a Phil's Gang member since 2014. Over that time, I've generated over six-figure profits. Following Phil, his charting system has really been a huge impact on my career and my life. I would recommend Phil's Gang to the mom and pop out there. I would recommend it to parents teaching their children. I would recommend it to grandparents. If you really trust in their system, you will do well.
For more information, go to philsgang.com or give us a call at 877-600-4264.
What does it take to be a successful investor in the stock market? Developing your skills and learning from an expert like Phil Grande and philsgang.com.
It doesn't have to be hard or complicated to learn how to invest in stocks properly. It's like anything else. You're going to golf, or you're going to learn how to play tennis, ski. You need to be with someone. Learn off of them, one-on-one. Now, that can be really expensive, cost thousands of dollars. But I have a program that you can join for 10 days free.
Go to philsgang.com and sign up for a free 10-day trial. Phil Grande has developed tools to teach you how to invest in stocks properly. Not only when to buy stocks, but how to sell stocks short.
85% of people in the market lose money. Get out of that group by just joining Phil's Gang.
Now you can learn to invest like a pro with a pro, Phil Grande. Take advantage of this special offer for a free 10-day trial at philsgang.com.
Try it. 10 days free.
That's philsgang.com.
philsgang.com.
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money, money, money's coming to me. Money sets me free. I'm a money magnet. Money, 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 money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. with your host, Phil Grande.
Good afternoon and welcome to Phil's Gang Radio Show and Podcast. Okay, today they're having a big rally up 600 points. But wait a minute. That doesn't make any sense. It really doesn't. They're all excited. Now, they're celebrating, remember, they're celebrating their PCE, sorry about that, okay? And they're saying, oh, this is great. Look at inflation. I mean, it showed that prices are edging higher in November, but a lot less than expected. What? I don't get that. Well, wait a minute. So they're saying inflation, prices edged a little higher in November, but because it's less than we expected, let's celebrate. And we're up 600 points because it's less than expected. That's like saying, think about it. That's like saying we have in my laundry basket, pull out a shirt. Oh, wait a minute. This is the cleanest dirty shirt in my laundry. How stupid could we be? So now make sure when the end of the day, you take a look at the volume and compare how many buyers we have today compared to the sellers we had yesterday, the day before. This is nuts. I mean, they'll celebrate on anything, but to say that they're celebrating because it's better than expected. They also did that, remember, with the PPI and the CPI. When the PPI came out, same thing, month over month, right? Especially the PPI, the wholesale one. That's the one you really got to look at. It doubled month over month, 0.2 to 0.4, and they had a rally saying the same thing. Well, it's less than we expected, so that's the new thing now. As long as it's less than they expected, it's good news. So bad news is good news. It's just insane. Anyways. So the market's up 600 points here today. So, and they'll give that back, believe me. All right. Now, how did we this week go from a drop of 1,123 points to the next morning we wake up, they turned around and went up 300 points overnight? What happened overnight? Did I miss some miracle or something? Did I miss some announcement? I mean, that's 1,000-point drop. And you go to bed the next morning, you wake up, oh, market's up 300 points. What are you, nuts? That's insane. Well, how's that work? Well, I'm going to explain. First of all, the market has what they call a plunger team, okay? The plunger protection team. Now, the plunger protection team, the president operates that. And the team consists of the Secretary of Treasury, the chair of the Fed Reserve, chair of the SEC, the chair of the Commodities Futures Trading Commission. That's the team. So they decide when the market goes down if they're going to interfere and bring it right back up. This is crazy. So they saw this correction starting, and they were worried that it's going to be the correction. We know that's coming, could be coming any moment now. If you remember, when Trump was elected, the market went up 13% on that, and November 5th, remember? After he won the election, the market went straight up, gapped up. So they were worried, and they saw, this must be the correction. They're going to wipe out that 13%, because we are going to wipe that 13% off. If anybody tells you no, they're out of their minds. We're going to wipe that out. That's just a happy moment. So, and then Trump, okay, the November 4th rally, that was fine, but now they're worried about, what about a 40% drop in the market? See, this is what they're really worried about, because the valuations are too high. I mean, you got a PE ratio, for example, of 28 of the S&P, and you have an historic PE should be 16. I mean, our historic PE ratio is about 16. We're at 28. That's inside. So they're really worried. The plunger protection team which is run by this administration, which, again, remember, they do not want to see Biden leaving with a correction. They want to see him going out of office with a big rally. So they're really not so fearful of the 13% as they are the 40%, because that's coming. And because you have a PE ratio of 28 instead of 16, the valuations are insane. We talked about this last week, and Buffett confirmed it. He sold two of his largest holdings. Apple was one of them. And he sold about 2/3 of his Apple holding for about $70 billion because he understands what's going on. And again, the reason he's selling was because he's looking at, okay, if you have these companies, you take all the companies in the S&P and the Dow and the small mid-cap companies, IWM, the Russell, put them all together in a basket and see how they're producing. So let's say they're producing, would use a measurement from 1 to 10, they're producing 1. But the stock price is at 10. That's insane. And that's about what's going on. So they keep on pushing these stock prices up without producing anything. So the stock prices go up, but we're not producing. Remember, all that $14 trillion that we injected into the economy, that we printed and injected this money supply since 2008, okay, that's been really what's been pushing this whole rally, this whole economy. And that's created all this inflation. So they know, and Buffett knows darn well, this thing is over. Something, and China could trip this. Anything could trip it. So, but going back to this magic trick of having the market go down 1,100 points, the next morning you wake up 300. How do they do that? Well, when the plunger team decides to intervene, what they do is they go to they purchase what they call equity index futures. Okay, so they could buy like the S&P, the index. S&P's an index. They could buy those. They purchase those. Then they immediately turn around and they place a bid. The plunger team places a bid right under or just below the existing price of that contract. Now, what happens when they put that bid, when they place it right underneath that, right under that below the existing price? Well, that's pops up a big red flag, and who sees that red flag? The hedge fund manager. Hey, look what's going on! Oh my God, they're not going to let the market correct. They're going to manipulate the market. So the minute the hedge fund sees that red flag, and remember how that works again, when they buy the index, the equity index future, and they place the bid just below the existing price of that index future contract, it's like a big red flag goes off. The hedge funds look, they're going to rig the market to go back up. And the hedge funds jump in. They go crazy. They pick up on that action. They start buying like crazy. And what they do is they front run the bid. They front run the bid. And when you start front running that bid, everything goes nuts. So that's how we wiped out the 1,123 point drop, and then the next morning we wake up, we're up over 300 points. I mean, they manipulate the market, and that's what they're doing. Now, remember, it's kind of unique. Think about it. Only the Federal Reserve can do something like this, okay? Because that's a huge risk. Think about the risk they're taking, okay? Buying futures in a market that's dropping. It's like you go to a racetrack and you bet on a horse, and he's not even out of the stable. He's still in the stable. He's not out of the stable. He's sick, and you're going to bet on him? So only the Fed can do this because they print money. They don't have to worry about being wrong. So that's how they keep propping markets up. So anytime you see a market even go down and you close the day out, the market's down 600 or down 500 or down 300. You ever notice the next morning it says implied opening? It's either at 25, 65, okay, most of the time it's 25, 65, or 85. Notice that? Well, that's how they do that. Every night, okay, when the market goes down, before the market opens the next morning, they rig it by buying these futures, by buying the index futures, and then the hedge funds come in and they see, oh, they're going to profit, and they start buying and buying and buying. So, but again, this is nuts what's going on. We have the PE ratios, as I told you, are insane right now. And then remember, it's the only thing that's holding up this whole stock market is Apple, Microsoft, Amazon, and Meta. They make up 28% of the S&P index. And since 2022, they've risen 117%. That means they're outpacing the remaining 493 S&P stocks. This is getting crazy. And the Magnificent Seven, remember, represents 30% of the S&P index, and they're contributing, 37% of the S&P first quarter of this year. Remember, we had a 10% gain in the first quarter, and 37% of that first quarter was the S&P, was these same stocks in the Magnificent Seven. And then in the second quarter, we had a 4% gain of this year, and 28% of the S&P, again, the same tech stocks. Now, for the first half of this year, the Magnificent Seven contributed almost half of the 14.5% gain. So the first half of the year, we had 14.5% gains, and half came from a handful of stocks. Those were the S&P, and not all seven either. Okay, not all seven either. So this is what's going on, and this is why the big hedge funds are dumping, and the big guys and the insiders are all dumping. And so again, we saw, and also the other thing we saw this year, the third quarter, the Magnificent Seven for the first time trailed the S&P 500. That's right, trailed it. And so the gains were terrible. So the S&P had a gain of 5.5%, but the Magnificent Seven was 0.2. That's it. So there may be a message in there. And most of the action is coming from Tesla, Apple, and Meta. So that's what's really going on. And again, so to hear today how wonderful this report was today is so stupid. I mean, the report wasn't wonderful at all. Matter of fact, the report was terrible. But to say, well, it was better than we expected, I mean, but this is how they operate. So that's what's going on. And you really think about some of the crazy stuff in the market that nobody thinks about. Think about all this inflation they're creating by doing this. When you have the market manipulated by the plunger team, and they come in and they take a market and they turn it around by manipulating it, just think of the inflation that is. Every time you print money, that's inflationary. And since 2014, the dollar has lost 25% of its purchasing power. I mean, we gotta get the gold standard back again. If we don't get the gold standard back again, we're just really screwed, because the gold standard is what held the value of our dollar. Now, that's just 10 years we lost 25%. And you want to know why when you go to the grocery stores or get gasoline, why things are so hard? That's why. But here's an interesting thing. You know, Apple, if you purchased an Apple, $22 when it came out in 1980, if you invested $10,000, you know how much money you would make? $32 million. Think about that. Now, 1980 is not long ago. Okay, now for some people it is, but not me. But 10,000 would have turned 32 million for you. All you had to do is put $10,000 in Apple and leave it alone. That's insane. And S&P in 2009, if you dumped money in the S&P after the crash and you left it there to today, you just dropped $100 in there, that $100 would be worth $852, or you would have had a gain of 753%. Now, does that mean you buy and hold? No, because you don't have the sustaining power. You don't have the sustaining power. Most people, they can't sustain when stocks are going down. They're not like Buffett. And Buffett can sustain his stock when he was young. He could just sit there forever. But most people can't do that. So it's hard. So again, the market, as long as money keeps going into this market, the money supply, and they keep doing these games, the market will keep going up. And the best way to know if you should be in or out, get my Pro 2 color-coded chart. When it's green, it says stay in, red, get out. Be right back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
When making wise investment decisions, Phil Grande has some sound reasons you should join Phil's gang.
You know, when I started this, they asked me, okay, can you explain to people why they should join the gang? Gee, I thought about that. And I guess to make money. But more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com. Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
And welcome back to Phil's Gang. You know, we keep hearing how the economy's just doing fine and how everything is just, ducky, right?
But I think we're feeling good about where we are and where we're headed.
How can he say that? I mean, that's a bold-faced lie. I mean, it makes no sense what he's saying. I mean, that's just a pure lie. For God's sakes, this guy, we got to get rid of the Federal Reserve. I mean, first of all, it's not federal. It has nothing to do with the federal government. It has no reserves. And the people they choose to run it are stupid. The people they put on the board are stupid people. All they are is academics. They never ran a business in their life. They never met a payroll in their life. They're academics. They go to high school, then they go to college, then they go to 4 colleges, then they go overseas somewhere to another college, then they come back to another college, then they put them on a board over there. They don't know anything. They couldn't count change unless there was a computer at the cash register. Makes no sense. But to say the economy is good, it just makes me so angry. Last weekend they were talking about it on every show. Wow, the economy is strong. Look how strong the economy is. Inflation's doubled. How can it be strong when inflation is doubled? For God's sakes, I'm talking about the month over month when I'm talking about the PPI. Now remember, the PPI is up 5 months in a row. For heaven's sakes, what are you, nuts? And you're saying the economy is good? And the CP up is at 4 months in a row. And that's like today. When you look today, the market's up 600 points, and they're celebrating the inflation news because it wasn't as bad as they thought it was going to be. I mean, that's, as I said, that's totally insane. And to have how can they be celebrating, say this is wonderful, but in the market's up 600 points today, but remember this week, it's going to be one of a record terrible week. It's going to be one of the worst weeks on record. But nobody cares. As long as they say, oh, it's better than we expected. Better than we expected. So if the economy, again, the economy is not good. If it was, Buffett and the hedge funds and the insiders wouldn't be dumping faster, at a faster rate than we've seen in a decade. They wouldn't be dumping. And again, these people are, like this guy, listen to this crazy person.
When you look at the PPI, which is inflation in the pipeline, for a lot of manufacturers and a lot of distributors, if you will, some of that inflationary pressure is coming down.
It's not coming down. Because remember, we're not producing enough. We're not producing enough. Think about what we do. So we go ahead and we print all this money to the government. And I talked about this before. And then you take that money you printed to government, and they go and they say, okay, we're going to buy treasuries from the folks out there in the United States. So any of you people in the United States, we're going to buy your treasuries from you. And you buy all the treasuries. That's debt. We're in debt, and our debt keeps going up. Then they take the debt, and they take the treasuries, and they go to their 5, 6 largest banks. They screw the small banks, go to, say, the 7 largest banks, and they say, here, we just bought these treasuries. Now what we're going to do is give them to you. Give them to you. You can have them. And then go to your back door, and you got a friend at the back door. Yeah, the back door of your bank. See who it is. And there's Powell. He's saying, hey, don't tell anybody, but I'm going to buy from you all those treasuries. So instead of having treasuries, you have a lot of cash. Now take that cash. Now we don't want you to help the folks. Take that cash and make sure you loan it to the biggest public companies. Give them that cash at near zero interest rates. We don't want to charge them zero rates because we want them to keep buying their own shares, to keep pushing their stock price up without productivity. So when you do that, and let's use a scale of 100, and when stock prices go from 0 to 100, and production goes from 0 to 2, and that's about where we are, you got a terrible economy. You got a dangerous economy. You got a market that can pull back 70%. Now, when I say that, nobody's going to believe me, but you do. You have a market that can pull back 70%, 40% if you're lucky. Only 40% if you're lucky. Because the common sense tells you you can't sit here and take all of this money. I'm talking about the banks now. And remember, it's a Ponzi scheme. To go print money, the government, and buy all the treasuries from the folks out there, and then take the treasuries and give it to the banks and tell them to go to the back door. Paul's waiting to give them money for those treasuries, and they take the money and give it to the biggest public companies so they don't buy equipment, they don't buy machinery, they don't increase productivity, which increases wages, which increases savings and so forth. They don't do that anymore. That's gone. So that's why we're heading for at least a 40% correction. But every time we correct, what happens? Like what happened this week. The Fed comes in. Oh no, we can't have the market going down. So let's jump in there and prop that market back up. Let's go buy index futures. Let's take those in, we'll go buy those index futures. And we'll make sure we prop the market up. And that's what they do every time. So every time the market goes down, they manipulate. And then as soon as they buy those index futures and they put a bid under it, then the hedge funds see it and they go, oh my God, this market's never going to go down again. Let's go. And then you got all the tourists going, hey, this market will never come down again. And that's why, so today, really, what's driving today up 600 points is Lilly. They're lying to you when they say, oh, it's because the inflation, it's better than we expected. No, it's Lilly. Here, I'll put Lilly up. But they're not going to tell you that. They're not going to tell you the truth. Why would they tell you the truth? There's no truth. This is unbelievable. When's the last time they told you truth? The only truth you get is here. And the truth is always watch the flow of money and watch your bond market. Look at this. Look how Lilly shot up today. That's why the market's up. Not because inflation was pretty good. Less than we expected, but it's okay. It's okay. Could have been worse. Now, if you take a look at the indices, let's go through some of the indices on my chart here. So let's take the spiders. So the spiders, okay, love the spiders. Now the spiders has broken key support, what they call the 50-day moving average. And you can see when the market dropped, right? When the market dropped, we had that big drop on December 18th. And look next to it on the 19th when they came in and the plunger team came in and they tried to push that market back up. It didn't go very far. And then here today, they tried it again, right? Pushing the market back up again today. Not going to work. It's not going to work. Because look at the volume. If you look below the volume is what you got to always look at. Think of volume as your gas gauge. When you go to buy a stock, the first thing I look at is my volume. That's my gas gauge. I want to see how much gas is in there. And I look, and all of a sudden, I got more sellers than buyers. Why would I be buying that stock? But today, people are in there buying the spiders like crazy. But they don't look at volume. Do you know that most don't look at volume? Most traders never look at volume. Never. So if you look at it right now, I'm telling you, unless the spiders can get above that high that we had here in right around that 608, this market's going to test that 200-day support around that about 552, somewhere in that area. Now let's take a look at the most important one that nobody looks at. Most traders never look at it, but that's the most important one. Look at the small mid-cap stocks, the Russell. That's the important one right there. Oh, and by the way, if you look at the spiders, pull up your spiders and then go look at your transportation stocks. Okay, let's see which symbol we want to use, Steven, on that one. Okay, I don't have the symbol here for transportation. IYT, I found it, my IYT. Now look how the transportation is going down, but the spiders are going up. Now, I mean, the spiders are going down, transportation going down. My point is the transportation is going down much faster than the spiders. What's that tell you? That tells you that we're producing stuff, but nobody's buying it because we're not transporting it. See, when you see transportation is down, that's very important. Two things you want to look at. IWM, the small mid-cap stocks, how are they doing, and transportation. So when you just draw a line on your spiders and then draw a line on your transportation. And when you see the transportation's going down and the spiders going up, you're in for a big correction. Or even if you see the spiders are going down, but transportation is going down faster, you're in for a correction. Watch your IWM, the small mid-cap stocks. That's how you know what the market's going to do right there, because that's the Russell. That's all the group of stocks together. That's the one that Buffett watches all the time, for those who follow Buffett, IWM. And right now, on our Pro 2 color-coded chart, that's the beautiful thing. I just wish everybody would work it for 10 days. It's free. When it's red, it tells you to sell. It's never wrong. When it's green, it tells you to buy. It's never wrong. And while you're buying or while you're selling, if you're buying and it's green and money's going to start coming out, you don't get surprised because it will give you a warning. It will turn yellow. And when it's red and you're selling short and it's going to go the other way against you, it warns you in advance. It turns yellow. Do you know the Pro 2 color-coded chart? I've been with that chart. We designed that chart 25 years ago. Over 125,000 users, okay? Users of that chart, 125,000. It works. And what they love about it is because it tells you when money's going in your stock and money's going out. And that's all you want. I don't care about the PPI, the CPI. I don't care about any of that. I could care less. I don't care about the balance sheets of companies. I don't care about their free cash flow. I don't care about their margins. That's all crap. It's all BS. The only thing that makes sense is where is the money going? And what stocks is the money going in? And the only hope you got to finding that is on the color-coded chart I designed. Is 25 years now. 25 years of excellence. It works. Try it. It's free. Now, so your spiders are in deep trouble. But where you want to know, what you want to know, okay, when do I know the market's in real trouble? I just told you. When you got IWM, that's the one. That's the key. When that broke the 50-day moving average the other day, that was on Wednesday. That was it. But nobody's paying attention to it. And then they came in. Now remember, that was on the 18th, and that's why the plunger team came in and bought index futures and went from 1,100 negative to, they wiped that out, and we wake up the next morning, it's up 300. What a turnaround! Because they're scared to death. They know IWM breaking that 50-day moving average was a red alert, a siren. We're heading for a 40% correction. The first correction we're going to get is the 13% out of that 1,500-point big rally we had because of Trump got elected. That's gone. That's over with. Now, you're going to make money on that one, shorting. Now, if you have my color-coded chart, it'll turn red. It will warn you. So keep an eye on IWM and also the banks, XLF, and especially your small banks, KRE. Look at KRE, all below the 50-day moving average, and everybody's out there celebrating. Look, the market's up 600. I'm celebrating. What are you, nuts? Up 600? Nobody's looking at the banks. Nobody's looking at the small mid. Russell, oh my God, it drives me crazy. Do me a favor. Go to philsgang.com. Try it for 10 days. Try it. There's no better stock education program than here at Phil's Gang, okay? We've been around a long time, okay? 25 years we've been teaching and developing our charts, especially the Pro 2. I swear by that chart. I mean, why would 125,000 people use that chart if it wasn't working? It's so simple. You haven't got to know about the fundamentals of the company. I could care less what a company's doing. I don't care about its numbers. I don't care about its margins, its top line sales. I don't care who's managing the company, who's the president. I could care less. I want to know where's the money going. All right, join the gang. Check it out, free for 10 days. philsgang.com.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me to make